So additional tariff updates. This is July 13th, 2025. All of these tariffs are according to value or their percentage of the value. Right now, we're looking at Trade Expansion Act 1965, Section 232. We have a 25% tariff on cars and car parts, 50% on steel and aluminum. There's a threat of 50% on copper. Some sites are saying this has already been announced. Others are saying that this is just a threat. So I don't know on that one yet. 200% may go into effect. It's just a threat at this point. If it does, it's talking about a year or a year and a half after it's been announced to give pharmaceutical companies some time to prepare for that. Section 301 of the Trade Act of 1974 is partially being used against China. Right now, we have a 30% plus tariff on goods from China, and China has put a 10% tariff on goods from the US. China has now allowed rare earth metals to go to the US for export. So that's at least good for, electric motors, EVs, things like that. The US-Mexico-Canada agreement, I'm not sure exactly what's going on with this. We're currently at 0% tariffs on all of those items, but it's just been announced that Mexico and Canada will have a 30 and 35% tariff on them. So I'm not sure how that's going to work. And they still have the same tariffs on steel, aluminum, cars, and car parts. So I'm not sure if this means that this agreement is basically being made null and void. Right now, we have a 10% tariff on most goods from most countries. There is some discussion I've seen raising this to 15 to 20% for all countries. Now, what's going to go into effect on August 1st? So we had Liberation Day on April 2nd of 2025. You can see how the stock market reacted to that. April 8th, the day before the announcement to pause the tariffs, the stock market was pretty much at its lowest point. And as soon as the announcement was made that tariffs would go on to a 90-day pause, stock market just rallied. So many of these letters, at least the ones in the middle, came out in July 7th, and then these other ones have been added on since that date. So the only ones at that point, which were the top 15 trading partners of the US, were really Japan and Korea or South Korea. The UK is basically staying at 10%. There's been no change with that. There's some potential negotiations for certain sectors. On July 2nd, there's been a deal with Vietnam to have 20% on goods made in Vietnam, but anything that's shipped to Vietnam and then back out of Vietnam, those will be at 40% tariffs. And they're putting a 0% tariff on US goods. Really, Vietnam produces a lot of textiles, and the US doesn't really export to Vietnam much. They said they're interested in SUV imports, but that's about it. So there's not a lot going into Vietnam. So the big things that are affecting the stock market are going to be the largest trading partners of the United States. So Mexico and Canada, they're huge, and same with the European Union. So if we have a 30% tariff on Mexican goods, 35% tariff on Canadian goods, and 30% on all of the European nations, basically, that's going to impact a lot of products. And if you're looking at the European Union, you're going to be looking at Germany, Ireland, Netherlands, Italy, and France. So a lot of our partners that are in the top 15. And if you look at Mexico and Canada, they're our first and second trading partners. This is going to heavily impact Canada because Canada, 75% of its exports go to the United States. The US exports about 16.8% to Canada. And it's fairly similar probably with Mexico. Our third largest trading partner is China. So if you look up here, we have 30+% at the moment. It's probably going to go up to about 54, 55% from what I'm seeing, but that's not fully been announced. That's not going to go into effect until August 11th or 12th. Some of these other countries, we don't do a ton of trade, so that's partially why the stock market didn't freak out on, July 7th, 8th, 9th. It didn't seem like much was going on. And at that time, the stock market was mostly looking at the one big beautiful bill. The reason for that is you had a lot of tax breaks. And if you have a lot of tax breaks and people have more money. Well, 60% of the US population is living paycheck to paycheck. So if you give people more money in their paycheck, guess what they're going to do? They're going to keep living paycheck to paycheck. They're going to spend it. And where does the money go? It goes to businesses, which is basically the stock market. Because when you buy something, it's probably from the 500 top US companies. Partially why the UK is not getting an increase in tariffs. The US actually exports more goods to the UK than the UK exports to the US. So why would you try to harm a trading partner that you're actually exporting more to already? Same with the Netherlands and same with Switzerland. The Netherlands get tied up into this just basically because they're part of the EU. That's about it. The other thing to know here is that any nation that's part of BRICS is effectively going to have a 10% additional tariff placed on top of them. So that would likely go to China, India, any other trading partners. Well, there's Russia, but we don't do a lot of trade with them. And then Brazil may go up by another 10%, but we'll have to see what happens there. With all of this information, what am I doing? Well, basically, before I do anything, I want to make sure I have some money in an emergency fund. If we hit a recession or a downturn or anything like that, I want to have some money set aside to keep my family safe for that period of time and give me some time to find a job. So I like to have a 6-month emergency fund. Anything is better than nothing. So $1,000 is better than zero. A couple months is better than $100. You get the idea. I'm still using dollar cost averaging, about 75% in the S&P 500, about 15% maybe in international funds, and about a little bit less than 10% in bonds, CDs, high yield savings. So one of the things I did do is with less than 1% of the portfolio, very small. I do have some SPY put options that I bought. So I bought to open at a $500 strike price with an expiration of September 30th. And the reason for that is right now the volatility was low and this was $1.49 a share. You buy this in increments of 100 shares, so it's $149. So I bought a couple of those, and that makes sure that at least I won't go below $500 on my S&P 500 shares, and I'll sell these off before the expiration. But this gives me some insurance. So if the stock market started to crash again, the SPY on, I think it was April 8th or 9th, was about $490 a share. And that's without tariffs actually being put in place, but the threat of tariffs. So I have a feeling that that could likely get close to 500 or lower once again. But hopefully I'm wrong and stocks keep going up. I just think there's going to be a lot of volatility over the next month or so. Another thing that I'm doing is I have something that's following the VIX. So this is UVXY. There's a whole bunch of other funds that follow the VIX. The VIX is basically a measurement of fear, or it's the fear gauge. So when the stocks are going down or when people are fearful, the VIX shoots up very rapidly. It also comes down really rapidly, so it's basically like a knife's edge. So I have shares of that, and I make sure I have a trailing stop because I can't watch this, because in the course of minutes or hours, it could dramatically gain or lose value. So I put maybe like a 20 or 30% trailing stop on that. So if it drops, it automatically sells. And I bought a lot of that around $20 a share back in early April, and then it went from 20 to like $40 a share, and a lot of it sold off about 30 something dollars a share. So that's just one example of this. And right now, I think we're sub $20 a share. So that's why I'm picking up some of that. And again, I put a trailing stop on that. So if it does shoot up, it also falls like a knife. I want to be able to have the computer execute before it drops too significantly. Remember that all investments carry risk and can lose value. Past performance does not guarantee future performance. So do your own due diligence. If it makes sense to you, that's fine. That's just what I'm doing. But really, investing is in the S&P 500 international and basically bonds, CDs, things like that. This to me is basically gambling, to be quite honest. If you enjoyed watching this, please subscribe. I have a lot of great content here, not just only, updates on the news, but also how to actually start real businesses for less than $1,000, how to get raises, how to make more money, how to save, how to invest. So I'm really looking to help people. So if any of that interests you, please subscribe. I also have a Discord channel that I go on a couple of times a week, so you're welcome to join that as well. And it's a free link, so have fun with that. Just be aware that some people will try to impersonate me and give direct messages. I'm not going to direct message you, but I will talk to people. All right, well, thank you for watching. Have a great day.